get into the new material. First of all, homework number 3 is available now. You've just submitted homework 2, right? You uploaded that before class. As a reminder, when you're using Cam Scanner, scan in black and white. And if you're taking pictures of paper, try and make it well lit and straight, so it's not, crooked and blurry and out of focus. Pay attention to the quality of the image. Make it easy for your grader to view the work that you've done. Do you have a question?
It's about Cam Scanner. Actually, I took a picture and it never, I tried to upload it and I went to my files and it never went on Cam Scanner. I had to email it to myself and save it in a different file. Is that normal, or is it just...
No, that's not normal. I'd be happy to help you out if you want to bring your phone to me. We can troubleshoot it together, but without looking at it, I really can't give you any suggestions or advice on what that issue might have been. Sometimes it'll only back up to the cloud when you're on Wi-Fi. I don't know. Okay, so we're going to be talking about gradients today and continuing the discussion of interest factors. Before we get into that, though, the Division of Highways is going to be on campus Monday of next week to provide you with a free dinner. That's the main purpose. And secondarily is they're going to talk about the summer internships program that they have available. So if anybody here is looking for something to do this summer to build your professional resume, the Division of Highways has a really good internship program where they provide paid employment, and there's a variety of geographic positions available. It's not all in Charleston. If you live clear out in some remote part of the state, chances are Division of Highways has a presence there, and it's possible that you could get an internship close to home. So I would encourage you to attend that meeting and hear some of the opportunities they have. A lot of their opportunities are in the area of civil engineering, construction, but they do have other opportunities that go beyond civil engineering. So if you're a mechanical or electrical engineer, they may have something for you. All right, so that's here in this building, 5 o'clock. I think some of the announcements have said 5:30, but it's 5 that event begins. Okay, in the quiz, you just did a conversion between a present value and an annual uniform series. It was the reverse of this one. In this one, it's saying find the unknown present value, where in the quiz what you had was a known present value when you were finding an unknown annual equivalent. But what you remember, I hope, from the general trend of a P/A conversion is that each of these annual amounts are equal. So that's why the arrows are the same height, is that the amount has to be the same for it to be a uniform series. There can't be any breaks in between. So if you had an amount in year 1, an amount in year 2, but then no amount in year 3, then it wouldn't be a continuous uniform series. So the uniform series is only continuous for as many unbroken years as the amount appears. So this was P/A. There's also the reverse of that, where you're finding a given P. And of course we have tables where we can go to the appropriate column and look up the factor. And in cases where we have a table for the interest rate that we're working on, then that means we don't have to solve the formula like you did on the quiz. The equation method will always work, but in your book there are a series, page after page, of tables for a variety of different interest rates. This one happens to be 10%. There's a different table for 8% and another one for 6%. And so the table has to be exactly for the interest rate that you're using, and then you can see that what they've done is they've bolded every 5 years to kind of make it a little bit easier to land on the correct row. You can sometimes be asked to find the future amount for a uniform annual series, and our standard convention is that when you're finding an unknown future amount, the F is in the same year as the last uniform amount. So that's a little bit different from when you were converting between the present and a uniform series. Look back to the present, starts at time 0, and the first time you see the uniform series is 1 year after that. And so the unknown and one of the givens are never in the same year when you're talking about the present. But for a future amount, they have the unknown future by convention occurs in the same year as the last amount in the uniform series. So whether you are given the future amount or whether you're finding the future amount, just keep in mind that just the assumed approach is that there's no A at time 0. So the annual series still begins as it always has in the first year. That's called the end of year convention. I hope you remember. But then the future value is in the last year of the series. Okay, so as an illustration, let's look at an example problem here. Here's the F/A table where we could find the future amount given an annual amount. So it says here that an industrial engineer made a modification to chip manufacturing process that will save her company $10,000 per year. So save the company $10,000 a year, that's an expense that used to be paid that now doesn't have to be paid. So that is treated like it's a revenue. So at an 8% interest rate per year, how much will the savings amount to in 7 years? So that doesn't mean just add up $10,000 per year for 7 years. It means take the time value of money into account and what's the annual equivalent if it's been all aggregated and combined together in terms of year 7. So here's what the cash flow diagram looks like. The arrows of the uniform series are upward because the company is saving money that they used to spend. So that's equivalent to a revenue. And we're trying to find out what's the equivalent future amount after 7 years. And so there's been 1, 2, 3, 4, 5, 6, 7 of these annual payments. And so if you compound this amount into the future at 8%, it's going to contribute to the length of that arrow. Then you compound the amount in year 2. How many years is that going to have to move forward into the future to combine to this unknown? Well, it's going to move 1, 2, 3, 4, 5. So we could manually compound each of these amounts with 1 plus I to the n, where n is the number of years that you're moving the arrow. But this F/A approach will do the same thing. So if we want to find the future amount, we go down to row 7. So 8.9228. So what that means is that you multiply 10,000 by 8.9228. And so that means it's going to be $89,228 is the equivalent amount. So it's not just simply that you're adding the money together. If it was a simple addition, then the cumulative total would have been 70,000. But the idea is that this money in year 1, the company got it in the first year, and maybe they invested it. Once they had those savings, they were able to invest those savings at 8% per year. And so what's the total value of the savings where the amount that you saved in year 1 and year 2 and year 3, all that money's been put to work doing something, and it's earning an 8% return during this whole timeline. And then in year 7, we want to find out the total value of the savings, including the principal amount and the interest amount that is accounting for the time value of money. Okay, so this is find F given A. Any questions about that illustration? An arithmetic gradient is even a little bit trickier than finding the future amount. A gradient occurs when profits are increasing or maybe when expenses are increasing. And the assumption here is that in each consecutive period, an amount goes up by a fixed quantity. So the general form of a gradient is, let's say that your company doesn't owe anything at year 1. But then in year 2, it owes a certain amount, G. Maybe G is $100. And in year 3, your company owes 2G. So now your company owes $200 for that year, $300 for the next year, and so on and so forth. The gradient maybe continues beyond just n equals 4, but it goes forward in time. If you want to find the present value of that gradient, then we have factor tables and equations that'll allow us to find p, the present value, for this gradient where the arithmetic growth means that the amount is increasing by a constant quantity with each consecutive year. Okay, so I have an in-class exercise handout for you today, and it starts with kind of just a problem that you've seen before, where you're finding A given P. But then on the second and the third questions, I ask you to practice with these gradients. And so I'm kind of leading you through the process of understanding gradients a little bit better, beginning on question 2. At the end of the semester, you're going to be able to knock out these simple problems like they're nothing. So this first one's pretty easy. P is 7,500, I 0.08, N equals 8. So since you've got the 8% table there, what you can do is find the A/P column, go down to the 8th row, and here's the factor, 0.17401. And so that's the ratio of A to P. So if you know if you know P and you want to find A, you multiply this ratio by the known amount. And so the answer is going to be 1305. And you'll notice I rounded it off to 10 cents. The reason why is in the factor table, there's only 5 significant digits. 1, 2, 3, 4, 5. And so we can't predict to the nearest penny because that would be 1, 2, 3, 4, 5, 6. We can only predict to the nearest 10-cent increment based on how many digits were in that factor. So that first one's just kind of a warm-up and reinforcing how to use the factor table. In the second question is where we're going to try and figure out how gradients work. So in a gradient, n is the same as it's always been. You know, it starts at time 0 even though there's nothing in the first year, we still count that as part of the n. So the first time you actually see an amount that's part of the gradient is in year 2. So you don't see any effect of the gradient in year 1, you see it in year 2. Okay, let me point out that here in bold, it's saying that for part C, you should use the 8% table. And so what that means is, if you want to find the present value, you go to the table, and for the row 4, we have the number, okay, so here's 1, 2, for the table, yeah, so 2, 3, 4. I cropped it out, but you can see that the factor is 4.6501. So if you're trying to find the present value, then you're going to multiply the gradient by that factor. So the gradient amount is 200 because each of these arrows is getting progressively larger by the amount of 200. And so once you know G and you know the factor, then you can multiply G by that factor to find P. It's just an algebraic relationship. Since this 4.65 is the ratio of P divided by G. I know that some of you are already making good progress on problem number 3, but we're going to continue problem number 3 when we meet together on Monday. So gradients are complicated. It's the sort of thing where you're not going to figure out and get comfortable with gradients the first time you see them and the first time you work with them. So you really need to think about this more than just once. And so a good way to do that would be to review the textbook, or to continue working on the in-class exercise so you can hit the ground running when we are meeting together on Monday. But I do want you to understand the general form of a gradient is that we have time 0, and then after that, in year 1, there's 0G, so no payment associated with the gradient. And then the first time you see the gradient kick in, we call that year 2. And so what's the n value for the gradient is the last year that you see the gradient occur. And so the last year of the gradient here is 4, and so that's what makes n equals 4 when we either use the table method, as we did in part C, or the equation method, as we did on part D. All right, that's all I have for you today. Remember that on Monday is that information session with the Division of Highways, and homework 2 is available now. Homework 3 is available now for you to take a look at and get an early start. So I'll see you in class on Monday.